Hey, Houston, Texas, there's a lot going on in the housing market. We're going to go through this information really quickly. If this is your first time to the YouTube channel, I'm Dinko, the realtor. I've been in the real estate game since 2016. Get ready to get your mind blown with game-changing data, information, and analysis you're not going to be able to find anywhere else. As an economics graduate and a previous analyst for one of the biggest trustees in the world, where we did stress tests and onboarded multi-million to multi-billion-dollar portfolios, I don't just analyze the housing market, I analyze everything as a whole. If you haven't yet, hit that subscribe button. Do it now, because this kind of insight, data, information, and honesty, you're not going to be able to find anywhere else. Now, do me a favor, smash that like button. It'll really help the YouTube channel grow. I'm a licensed real estate agent in Texas. My team and I specialize in helping people just like you across the greater Houston area. I have people reaching out to me all the time. We're putting strategies together to take advantage of the housing market here in Houston in 2023. Now, let's dive into the information. We're going to go through this really quickly. Look at what's going on with the interest rates here. The interest rates are skyrocketing to above 7%. Right now, in October and November was the highs, where the interest rates were above 7%, and we're heading that way. And look what happened last time. This was an article here in November. Home builders struggle to find buyers as cancellations rise because interest rates were skyrocketing. This is why I was saying, don't buy right now. Wait for that spring inventory to hit the market, and you're gonna be able to get yourself a much better deal. Now, the greater Houston area has new construction levels that are some of the highest in the entire nation. That just means that inventory is going to flood more and more, and when these builders get more desperate, you're going to be able to get a much better deal on a new build and on an existing home, because prices are going to continue coming down. Now, I want to go back to the interest rates. Just because it says that the interest rate is 7%, that does not mean that everybody is going to qualify for that 7% interest rate. That means that that is something that's available. It depends on your debt to income ratio, your credit score, the type of loan that you're getting. All of that is impacting the interest rate. Majority of people right now are already going to be above 7% because they're not going to be able to qualify for this, right? So keep that in mind as you're going through this video and as we're analyzing this information. Now, right here, look what happened. So this goes back 2 weeks. February 2nd, interest rate was 6%, and we see it going up, right? We know that it was going down. Builders were saying, oh, you better buy now or you're going to be homeless. You were hearing that in the news that, hey, inventory is going to be going down, buyers are coming out, and then all of a sudden, as we dissected in the previous videos, that was not the case. That the mortgage applications are down 40% year over year, and this is nationwide. Now, let's dissect this information a little bit further here. This is KB Homes. The Fed's ongoing housing market reset sees buyer cancellations rate at one of the nation's largest home builders spike to 68%. And look at KB Homes. They have a pretty big footprint in the greater Houston area. And if we add what's under contract, that gets even bigger. Look at that. And we know that they are not going to be closing all of their homes that are under contract. What does that mean? Inventory is going to keep flooding. What does that mean? Builders are going to have to keep dropping their price. The average home price has already went down 11.5% in the greater Houston area. There are houses, almost 1 out of 3 single family homes is on the market for 100+ days. That means it's not even part of the sold data statistics. The market took 2.5 years to go up. It's only been 7 months since the prices have been declining since the peak in June. It doesn't happen overnight, but losing those kind of gains, and we're going to dissect this in a future video, that 11.5% is actually eating up at a lot more. It's eating up almost a third of the gains that we had during the pandemic. So we're going to go over all that information. Now, this is another builder. This is Lennar. They are the nation's second biggest builder, and they have an even bigger footprint. Now, I'm going to show you why this is important and why to follow this. Now, let's take a look at what's currently under contract with them, and look at this. I mean, you can't even pull it all up because of how much it is. It's too much for even the map to pull it all up. Now let's dissect what's going on with Lennar. And we did this in a previous video. So go look at that video, the new construction. I think it was titled watch this video before you buy new construction. I actually dissect the entire report of Lennar and of the new construction housing market. So make sure you watch that. And I said we were going to go through this quickly. Smash that like button and know that Dinko the Realtor has your back in the greater Houston area. Look at this right here. They have 3 categories. We went over this as well, so I'm going to be quick. They're category 1, 2, and 3. The higher the category, the worse it is. We see here that Lennar is saying that they are going to lose. We expect to have a loss of about $10 million. And looking at business segments, we anticipate our financial earnings for Q1 will be in the range of 50 to 55 million. We expect a loss of 25 million for our multifamily business. That's not sounding good, is it? Now let's keep going here. Let's keep going. And we'll go through this quickly, like I said. All right. So here we go. Categories. Their category 1 markets are performing well, right? And they go through that they had to make adjustments, and they say markets continue to be strong in category 1, right up above. We had to offer mortgage buy down programs and normalize incentives. And this is where Houston is. Our category 2 markets, which reflect markets where we have made more significant adjustments and have finally regained sales momentum. Lennar is being one of the most active builders, as they are not wanting to be stuck with that inventory. They don't want to see the cancellation rate that KB Homes had of 68%. However, they're still seeing cancellations rate of almost 30%. That means almost 1 out of 3 or 1 out of 4 people are canceling that are under contract. Now let's look at this right here. We see that in their category 2, you have Dallas, Houston, and San Antonio. And if we go down, we see that in their category 3 is Austin, Texas. The 4 major cities in Texas are all either in category 2 or category 3. Now let's go look at the consumer price index, right? We did the revisions. This is what's making the interest rates go up. And we did this in a previous video where the 10-year right here, this is where the interest rates were 2 to 3%, and interest rates are based off of the 10-year. Look how much that has skyrocketed. This right here is that October-November data where interest rates peaked, and that's where cancellations went up even more. Now look at this dip after Christmas and New Year's. I mean, it's just a small dip, and you had people saying you're going to be homeless if you don't buy because all these buyers are going to be coming out the woodworks, and we know that the mortgage applications are down 40%. Don't fall to that fear-mongering. Follow the data, and you're not going to get this data anywhere else. I told you. Look at this. Look at what's happening with the 10-year. It has been going up because the revisions of the CPI show that the consumer prices are a bit firmer than previously reported. So they readjusted October, November, and December. Instead of it being negative 0.1%, now it is plus 0.1%. That's why before the Fed even released the official data on Valentine's Day, interest rates started going up because the 10-year started going up because they said, whoa, inflation is not under control, so that means that the Fed is going to be fighting the war on inflation much longer, and maybe they're going to now again get more aggressive at increasing the Fed rate. This is why we have to follow everything, and you're going to get this on the YouTube channel right here. And look at the price, the producer price index right here. Let me pull that up. January PPI reports show producer prices rose. This means that now this is an indicator of what's going to happen with the CPI, with the consumer price index. And right here, the producer price index measures the average change over time in selling price received by domestic producers for their output. Now, that came out, and look at the articles right here. The Dow closes right up here. The Dow closes 400 points lower. The inflation is, it's not cooling. That's just showing you that there is still more to go on the war on inflation that the Fed is fighting. That's all going to make cancellations higher. That's all going to give buyers less purchasing power, and that is going to increase inventory. This is the stuff that we have to follow of what's going on. This was the official one on Valentine's Day. Inflation rose 0.5% in January, right? Which is up 6.4% from a year ago. And that right there made interest rates continue trending upwards, and now they're a lot firmer. And that lifeline that the builders had and people doing the fear mongering saying interest rates are going down, you better buy, you're going to be homeless, that lifeline is gone. Make sure you subscribe to the YouTube channel below. You're not going to find this insight, data, and analysis anywhere else. Give me a call. Remember, my team and I, we're helping people just like you across the entire greater Houston area. Feel free to call me. My contact information is down below. Let's strategize. Make sure you take advantage of the housing market. And if you haven't yet, smash that like button, give me a thumbs up, and help the YouTube channel grow.